Kango.
Hello everyone, let's have a look at this week's economic news. Thanks, I go.
Key points of this week. Fed makes emergency rate cut again, but markets keeps crashing. Global stocks closed significantly lower last week as a worldwide losing streak triggered by falling oil prices and worsened by fears for the coronavirus hit global economy continued. Wall Street suffered, with some down by $6,000 billion. Earlier this week, the Federal Reserve made another emergency cut to interest rates, slashing the federal funds rate by 1% to a range of 0 to 0.25%. The Fed also announced $700 billion QE program, and it is trying to stay ahead of disruptions in economic slowdown caused by the rapidly spreading coronavirus. The moves came just days ahead of the Fed's two-day policy meeting, scheduled to begin this Tuesday, March 17. The action is taken by the Fed marked the second emergency action in about 2 weeks after the central bank cut interest rates by half a percentage point on March 3. The Fed policy move highlights a tumultuous week for equities. The U.S. bear market crashed to new lows on Monday. The mayhem quickly spilled over into the broader market with the Dow Jones Index tumbling 9.99%, or 2,997 points, which closed at 20,188, while the S&P 500 index cratered 324 points, or nearly 12% for these worst one-day performances since 1987. It was a huge shock to the Wall Street as U.S. President Donald Trump officially declared that the economy would fall into a recession. And his words made confidence of investors depressed. Global stock markets crashed with coronavirus panic selling hitting almost every asset class and leaving investors nowhere to hide. The BOE's Monetary Policy Committee announced on Wednesday night a £200 billion increase in the central bank's bond buying program to £645 billion, $752 billion. Investors are more convinced the world's big central banks would follow. On hopes that more stimulus measures may be unveiled, major markets from New York to London stopped going down. Hong Kong stocks opened higher on Wednesday after plunges in the Wall Street. The stocks closed up 200 points, or 0.87%, to 23,263 points. However, the Hang Seng Index rout after rally. The benchmark fell 1,152 points, which closed at 21,713 on Thursday. It dropped to the lowest level since 2017. Hang Seng Index erased big losses of last day and pointing to a higher open on Friday. The stocks rose 5.05% or 1,095 points to 22,805 at the close of trading. Turnover totaled 171.272 billion Hong Kong dollars. Hang Seng Index lost 1,227 points totally this week. The Hang Seng China Enterprises Smart Index was 6.53% higher, or added 559 points at 9,118. Its turnover totaled 64.76 billion Hong Kong dollars. Hang Seng China Affiliated Corporations Index closed 7.91% higher at 3,406. Turnover totaled 11.491 billion Hong Kong dollars. On the mainland, Shanghai Stock Exchange Composite Index added 43 points at 2,745 at the close. Its turnover totaled 281.583 billion Hong Kong dollars.
Thanks for watching. I will see you again next week. Bye bye.